All right, welcome to the Explainer. Today we're going to build your complete UK investing toolkit from the ground up. And the best part? We're going to do it all without you having to spend a single pound.
One of the biggest things that stops people from investing is that fear, right? The fear of making a really costly mistake. But what if I told you that you could get everything ready, get comfortable, build your confidence, all for free before you even think about risking any real cash? Well, that's exactly what we're going to do today.
Okay, first things first. Before we even dream about picking stocks or funds, we have to talk about safety. Seriously, the most important piece of gear in your new toolkit isn't some hot stock tip. Nope, it's your safety net, your foundation for making sure you're secure from the get-go.
And here it is, your first, absolute, non-negotiable checkpoint, the Financial Conduct Authority, or FCA. Look, before you even think about signing up for any platform, you have to go to the official FCA register and check if they're on it. If they're not there, you close the tab, you walk away. It is really that simple. And this is why that FCA check is so important. That £85,000, that's your safety net. It's called the Financial Services Compensation Scheme, or FSCS. If you pick a firm that's properly authorized and, heaven forbid, it goes bust, this scheme steps in to protect your money up to that amount. It's an absolutely crucial layer of security.
So let's just nail this down. This is your three-step check for any broker every single time. 1, search them on the FCA register. 2, confirm they're covered by the FSCS for investments. And 3, look past the shiny commission-free marketing. You've got to compare the entire fee stack. We're talking foreign exchange fees, platform fees, all the little things that can seriously add up over time.
Okay, so you've got your safety checks down, you know how to find a legit, secure platform.
The next thing you need for your toolkit is the right pack, the right account to actually hold your investments in.
Right, so you've basically got two main choices here. For most people in the UK, the stocks and shares ISA is the place to start. Why? Because any growth, any income you make, it's completely tax-free, up to that £20,000 annual allowance. It's amazing. Then you've got the General Investment Account, or GIA. Think of this as your flexible, taxable backup plan with no limits. So the ISA is like your special tax-proof backpack, and the GIA is for everything that doesn't fit in there. Okay, you've got your safety checklist, you've picked your account. Now for the really fun part. It's time to actually learn the ropes, get a feel for how it all works, but, and this is key, without risking a single penny of your own money. First up, build a watch list. And let's be super clear here. A watch list is not a shopping list. It is a learning list. You are not committing to buy anything at all. You're just window shopping. You're earmarking a few different types of investments just to see how they move, how they behave. So maybe you'd track a core index ETF, like one for the FTSE 100. Maybe something different, like an infrastructure fund, or one that's all about income. It's all just about watching and learning. Okay, this is your training ground. So many brokers now offer a practice mode with a big pile of fake money. You have got to use this. Go in there and try placing what's called a limit order. That's where you say you'll only buy at a specific price, or better. But here's the most important bit, step 3. Get a journal or just a piece of paper and write down why you would make that trade, what you're thinking. And then you just cancel the order before it ever goes through. Boom, you've just learned the mechanics, you've practiced your thinking, and it cost you absolutely nothing.
All right, you are so close to being ready. You've got your safety down, you've got your account, you've even practiced a few moves. But a truly prepared investor doesn't just know the path forward. They also know about the traps, the monsters lurking in the shadows that you need to avoid.
So, what is it? What is the single biggest danger for new investors? Well, it's a type of complex product that gets marketed really aggressively to beginners, but it carries an absolutely huge risk of losing money, a really high risk. We're talking about CFDs, contracts for difference. Now, in simple terms, a CFD lets you use leverage. Think of leverage as borrowing money from the broker to make a much bigger bet on the market. But, and this is a huge but, that magnification works both ways. So if a stock moves 5% against you and you're using 5x leverage, poof, you've just lost 25%. Your losses are amplified just as much as your potential gains. And yeah, you can even lose more than you put in. These are absolutely not for beginners. And you don't have to take my word for it. The data from the UK's own regulator, the FCA, is, well, it's brutal. It shows that somewhere around 75%, that's 3/4, of all regular retail accounts lose money trading CFDs. The odds are just massively, massively stacked against you. Okay, so CFDs are the big one to avoid, but there are a few other common traps to watch out for. First,
trading too often. Those fees and spreads will just eat away at your returns. Second, platform outages. It happens, and they can freeze you out right when the market is going crazy. Third, FX risk. Remember, if you're buying US stocks, you're not just betting on the company, you're also betting on the pound versus dollar exchange rate. And finally, the illusion of diversification. Look, owning 10 different tech funds is not diversified. It's just one big bet on tech. Okay, let's pull all of this together. We're going to give you a super clear, actionable 5-step plan. This is a checklist you can literally do in the next 30 minutes to build your entire toolkit right from scratch. So, here it is, your starter checklist. Number 1, check a broker on the FCA register. 2, confirm they have FSCS protection. 3, open the account you want, whether it's an ISA or a GIA. 4, build a little watch list with 3 different ideas. And 5, place and then cancel a practice trade. That's it. If you do these 5 things, you will have a complete toolkit and, more importantly, the confidence to move forward when you're ready. And remember, you've done all of this without spending a single pound. So your toolkit is ready. You've got the safety gear, you've chosen the right pack for the journey, you've even practiced tying the knots with paper trades. But how do you actually read the map? How do you decide which direction to go in, what to actually invest in? Well, join us for the next explainer, where we're going to show you exactly how to understand a company's health in just 15 minutes.